Thank you.
Thank you very much. So for this closing session of the day, we're going to talk about probably the continent with the most amazing opportunities. We're going to discuss that with Viola and Rania. I'm going to ask you, because timing is of the essence here, just to introduce what your business is exactly about in a few minutes, and then we'll get to the detail of the roundtable.
Good afternoon, everybody. Are we awake yet? I swear to you, we're going to make this slightly interesting. I was going to tell you all lies and say that I stuck something under one of the chairs with money in it and make you all reach underneath there. But I know that that would be total BS and you would never trust me again. But it's a pleasure to be here. Thanks for your time. My name is Viola Llewellyn, and I'm the co-founder of a company called OVAMBA Solutions, Inc. I was born in London. I have Cameroonian parents. My Jamaican business partner told me that we ought to go and do something, as they say in Africa, to help SMEs get access to capital. I told him he was full of rubbish because Africa is a dusty, messy place. I've lived there. There's nothing going on. And he explained to me that's the very reason why we ought to go there. Because where there are market imperfections and where there are difficulties, there's opportunity. So the opportunity that we built was a fintech platform to allow SMEs to get access to short-term capital in the trade and commodities sectors. We're one of the only companies in the world who's ever figured out ethnic and tribal data to embed in risk models, because after all, 1.2 billion human beings, over 2,000 languages for which we've built natural language chatbots, you can't just take risk models from anywhere and plonk it down on poor unsuspecting individuals. You would not take the French credit models and take it to Cyprus and say, bonjour, alors, allons-y. It bloody would not work. So that's what we've done. We've embedded culture in the way that Africans need to access capital. And I'm in a couple of countries, and I'm going to hand it over to my dear friend Rania.
So Rania, what is AFRIMARKET exactly? Because it is not what it was when you initially started it.
Hello, everyone. I'm very happy to be here today. Yeah, exactly. Startups growth and startups change towards the years. So AFRIMARKET is one of the leading e-commerce platforms in West Africa with a full integrated logistic that allow us to deliver within the last mile every customer within 5 days. So we deployed the solution in 5 countries: Ivory Coast, Senegal, Cameroon, Benin, and Mali. And we sell all kind of products: food, health, stuff, appliance stuff, and electronics, and also like mutton for Tabaski, the hide in Senegal and Ivory Coast, to be a real e-commerce and curated marketplace. We created the company 5 years ago. We employ today 180 people in Paris and in our 5 subsidiaries in Africa. And we deliver more than 1,000 parcels per day in our African customers.
So you've noticed that we have a third guest is on stage. It's going to be quite a challenge for him to find some speaking room with a 2 chit-chat box next to me. But we're very happy to have you, Philippe. Philippe Collombel, you're well known from everybody in this room. You're a partner with PARTECH. You launched PARTECH Africa earlier this year. You raised $70 million first closing, aiming for $120 million, so to speak. You're the only local-based Pan-African generalist seed fund. What are for you the 4 or 5 main drivers that make this continent very attractive from a VC perspective?
Thank you. Yes. First of all, the market is very attractive. Several reasons. There is no US fund on the ground. There is no Chinese fund on the ground, which are the 2 largest providers of capital worldwide for venture capital. For once, we have some advantage, we being the African and the Europeans, because we are operating almost in the same time zone. We are lucky enough that the 2 main languages being English and French, it's also an advantage. Strangely enough, it's already a barrier for a lot of US funds because they need to deal in 2 languages, and for some of them, it's already a lot. Third, the quality of entrepreneur is amazing. When we launched the African initiative at PARTECH, first I've been trying to find top-notch partners for almost 1 year, and we finally found Tidjane and Cyril. And frankly, we didn't want to deviate from a fund managed by Africans for Africans. It has been quite a ride. A lot of people told us, we are super interested, but you need to finance the expansion of your European or US company into Africa. What we told them constantly with Cyril at Tidjane, no way. No way, because we believe in the entrepreneurial potential of this huge continent. It will be 1/3 of the world population by 2035. There is an emerging middle class. One data which is amazing, since March 2017, there are more smartphones sold in Africa than in Europe. And people still believe that in Africa you have cheap phones. No, but that's you agree, that's still what the people believe. Even what is interesting, Google will surprise by the fast emergence of smartphone. But smartphone, you need to consider that it's an investment for the Africans. You do everything on your smartphone. You do many more things that we do in Europe. It's more advanced. Let me come back to the entrepreneurs. When we fundraised, people told us there is no talent on the ground. That's absolutely untrue. The quality of the entrepreneurs in Africa is nowadays almost at par with the Europeans. It took us 20 years to bridge, in Europe it took us 20 years to bridge a gap with the US entrepreneurs. In my view, it will take no more than 2 or 3 years by now for the African entrepreneur to have bridged a gap with Europe or the US. These people are extremely entrepreneurial, risk takers, very well educated. They understand complexity. First element, a lot of these startups are leapfrogging. Some of our new latest investments, the first investment of the fund, that's pretty amazing. Basically, what the Africans are doing, they're starting from scratch. Instead of building old ERP on old IT systems, they are building ERPs on smartphone. Very simple, very
And by
efficient.
the way, the same people who you think don't know what we do with smartphones probably think we live in trees, and that's just not the case.
No way.
So
You can't have said that. You can't. I just picking it from here because there's only a few minutes left and we need to get going, and then there's a cocktail party on the first floor and everyone is pushing me to finish because they shut the light down at 6:30. So anyway, I want you, Rania and Viola, to react on one of few things that Philippe said. First, question for you, Viola. Is the African market bigger than most people think? Because that's what Philippe is telling us from an investment perspective. And Rania, why is it the right time to be there and expand and really pick up speed on the development?
yeah, categorically in bullet points, I think everybody in this room knows exactly why Africa is a good opportunity and what the SME space represents for startups. But here's why it's bigger. The land mass is big enough to contain the United States, parts of Asia, some of China, and a lot more. The way the globe is written, it makes the African continent look physically smaller than it really is. Secondly, 1.2 billion human beings today. In 2040 will be 2.5 billion people under the age of 40, which is the largest youth bulge bracket. 67 urbanized cities with more than 1 million human beings in it makes it far more urbanized than India at the dawn of the BRICS, when everybody thought they were being terribly clever by taking advantage of investing that space. When you talk about size, we really need to talk about scalability. We're here in France, lovely France. I'm from Cameroon, I'm an Anglophone, but the one thing that I discovered was that when you sit down and speak to Americans who don't often go to the continent, and you explain that the harmonized code known as OHADA has one business law, one accounting system.
Everything is harmonized. It's not like
Exactly.
fragmented
It's
like
not
people think it
fragmented.
is.
So scalability is high. If you're smart enough to get your hands on blockchain, then the ability to surmount the challenges of borders means that you have an addressable market of human beings who take technology very seriously. It's super sticky, and the female entrepreneurs are on the rise. Your turn.
Yeah, it's very interesting. And actually, what I can add about the market dynamics in Africa, what we see is that there is a huge mismatch between the demand and the supply. When I talk about supply, I talk about infrastructure, I talk about retail industry, I talk about routes. And so there is like a huge mismatch about it. From the first hand, you have the African middle class rising, who is more and more structured and want more and more specific and good products, good quality. And on the other hand, you don't have many offer for them. For example, in Ivory Coast, you have only only 6 commercial centers for 6 million people. And for example, in those countries, the square meter per capita per commercial center is like 1,000 times less than in the US. So like this demand is like a huge opportunity for a company to provide new service and new opportunities for African customers.
And what Philippe was saying was that there are actually no really active US or Asian originated fund. It's also true on your competitive landscape. There's no Amazon and no Alibaba blocking your way in Africa.
Exactly. Today in Africa, there is 2 operators in African e-commerce. There is Jumia and there is us. Us, we are focused in French-speaking countries for now. And with that, we did many fundraising. So we were supported by investors to invest into this area, to create value for the African customers. And the big challenge was first to develop a huge logistic platform which allow us to deliver within the last mile. Because why there is no opportunity, because you cannot just go and do a copycat for European e-commerce and say, okay, I'm gonna launch this product, this vertical. No, to operate an e-commerce in Africa, you have to propose everything to your customers, you have to bring quality, and you have to provide the delivery into the last mile.
So you move from one basically cash to good service provider to a full integrated e-commerce platform. You also adjust your business along the way. And you're not a fintech.
Not the way everybody else thinks. One size does not fit all. The whole of Africa does not survive on mobile wallets and payments, much as important as they are. But what Rania is saying, she pivoted her company to the same logical conclusion that we did. When we started, we thought that we would partner with microfinances to deliver capital. And we realized that it's about the velocity of capital in the system that makes the difference. So we deliver capital via logistics. At no point do we put money into the hands of SMEs. The continent hasn't reached the point where there are enough checks and balances with governments and databases and credit to be able to say, hey, you didn't pay back, here's a penalty. You're going to have a hard time enforcing that in a court. So what OVAMBA instead does is we do something similar to you. We buy the goods on behalf of the importers, and we use an Airbnb style of flexible warehousing to put the goods in the warehouse, because the problem for the continent is growth. It's not money. How can we use capital, logistics, and tech to bring about growth? And that's similar to what you guys do.
So what do you think of that statement, Philippe? It's about growth, not money or capital. Would you agree on that?
Well, I think what is still missing in Africa is a true financing infrastructure for startup. I think that's the only, when you compare with Europe, that's the only missing part. And very interesting data. There has been almost 220 companies funded by US or Chinese firm. 208 was one single deal investment. That means the firms that are doing deals in Africa, they are doing one-off deals because the entrepreneur went to the same business school in the US as one of the partners. This is not what we can call a true ecosystem. That's the reason why we believe at PARTECH the potential is immense. We are the only early stage fund dedicated for Africa, you need to understand that the seed stage is amazing. You have almost 500 incubators on the ground.
442.
Yeah. Almost. Thank you for almost 500. It's changing by the day. A lot of them have been created by I've been launched at the beginning by my partner Duten. That means he knows the space very well. The only thing that is still missing is professionally managed capital dedicated to Africa. I think we are pioneer in this sense at PARTECH. I'm sure we won't be alone for very long. This is very good for the African entrepreneurs. That's probably, we won't be a monopoly anymore, but that's the rule of the game. I think we all need to build a tremendous ecosystem. One thing that I wanted also to mention is that when people are looking at Africa, a lot of times they say, okay, you have South Africa, you have Nigeria, you have Kenya, and forget about the rest. That's absolutely untrue. West Africa is emerging quite strongly, and it's unnoticed. It's also very much unnoticed because a lot of these countries are French-speaking, and there is very few investors that are interested in French-speaking countries for the time being as well.
So I have a few questions for you, and because time is running out, I'm going to throw them in the air, and you pick up the one you choose. Does that mean, from what you're saying, 220 active VC, out of which 208 actually have only did one deal so far, does that mean that there's a big discrepancy between what VCs say they want to do in Africa and what they actually do? So that could be a question for you, meaning is it difficult to raise money when you're an African-related business startup?
Yes. The benchmark for Africans is unnecessarily incorrect and does not take into account enough of the metrics that you need in order to judge the success. And the fact that there is no line of sight for the growth capital for them to land on as they evolve from startup to that point makes it very difficult. Our company alone, we have funded, I think it's 260 different separate companies with short-term capital for trade. That's a better track record than the rest of them. So there needs to be a different way in which we calibrate data, collect data, and measure Africans.
Yeah, of course, it's in Africa and Europe, it's not easy to raise money. So this is a real challenge. But for us, raising money was not like the real issue. Investing quietly this money was a bigger issue for us. Yes, because once we have a foot in Europe and we work in Africa. So this is like it's like a reassurance for an investor, for a new investor. We have a sustainable business model where we collect a customer in a very low cost of acquisition. So there is like a real mandate for investment. So yeah, of course, raising money, it's always difficult, especially in Africa where you have like a real, you have many opportunity of investment and very low actors who support those opportunities and who invest in Africa. But things are changing and it's the start for something new maybe.
But one statistic that's very interesting, when you speak with CEOs, investors in Europe, they all believe that Africa is about raw material. When you look at, when you look at the relative investment, raw material, energy is less than 5% of investment in Africa. That means that there is still a misperception of the potential of this continent.
And would you both agree on what Rania said, which is finally you probably managed to raise less capital than European company, but your African startup are probably more cash efficient than European startup. What's the average cash burn of African startup versus American ones and European ones?
Well,
have you done that?
I would say that's taken for granted. I think it's for sure. You need to take into account that, in my view, a European startup is probably 3 times more cash efficient than a US one. Already. And I think my guesstimate what will be that an African startup is probably 2.5 to 3 times more efficient than a European one.
I'll give you real numbers. We've originated 150 million euro in deal flow in Cameroon alone, not including the new commodities business. We have dispensed 23 million euro to Cameroonian businesses, and we did that off 9 million of euro rolled over again and again. I would say that we're efficient by about 2.3%, but that's just our model.
Would you like to add something? Because how much have you raised? Like 15 million euros?
Yeah, exactly.
To
Until
build,
now,
to build?
yeah, 15 million euro to build an e-commerce in
platform.
Africa in 5 countries. Yes, it's pretty cash efficient. But of course, there is like many use cases.
Do you think it's because we're women? Could be.
I won't say that.
And if you, because now we're already, 30 seconds ahead of the last timeline. We haven't took any question yet, but one challenge that you see, what is the big challenge for you? Business-wise, investment-wise, what is the
Customers. Customers need to be interrupted. They completely don't get it.
Customers being SMEs for you?
SMEs, they want to run to a microfinance. When you challenge them with real growth tools, they need the experience to use them. It's the customers.
For us also, it's about the customers, create value around the customer, create like a great opportunity for your business. And there is many monopoly in Africa, there is many super high margins, so I'm pretty sure that if you provide the good service for the good price for the African, from the middle class, it will be a real success.
Average spending on your platform?
90 euros.
90 euros?
Yeah, it's quite like a European average basket.
110,000. We lend up to €500,000 per transaction.
Philippe, what are the biggest challenge for you as a VC just setting foot in Africa?
Size. It's China fits in Northern Africa. People don't realize that. It's 9 hours from East Africa to West Africa. 9 hours. People don't realize that because of the mapping system. That underestimates the size, as was said. That's very, very true. The second, for us as fund manager, of course, currency risk. That's something that we need to deal with. That's an issue that some of the startups will face as well. That's, of course, a tremendous issue for us. We need to live with it. There is nothing we can do about it. That's all about risk diversification and well spreading our investments.
Okay, shall we take 1 or 2 questions? I don't see any question popping up on the screen because they want us out. Do you really want us out? Oh, it's working now. Well, I can't see anything from here.
As you said, there are so many countries getting traction in Africa. Which factors should a company consider to select the country it's going to start investing in? It depends. You've got to choose your hard. That's what I say. You either want to do what you said, Philippe, which is, oh, look, we're in South Africa, Nigeria, and Kenya. We've got an African footprint. That's only slightly true. That's a fallacy. Or you can decide that you want to go with whatever's culturally difficult, financially difficult. It's up to you. Where does your business model fit first? Personally, if you're going to run a beta test, go in the hardest place because it will bring you the results you need faster.
It's like learning curve.
Yeah.
Would you like to add something? Because you're in French-speaking African countries.
Yes, us we are in French-speaking. How we consider the opportunity in a country, we have to see the African middle class. There is so many data. There is so many data on the African middle class. We don't know exactly what their purchase power. There is no real data. And what you can see, it's very interesting. How we measure the opportunity of a country. We see the Facebook active users, which is like people who has a smartphone, who has money to buy data, because there it's like a prepaid countries, and that are digitalized, so it's very easy to get them.
Philippe, do you work with PE African firms for growth? Or do you rely on yourself only?
Well, first, we launched a fund early January. We did 1 investment already. We are planning to do 5 or 6 per year. We are doing our second investment. It's still early stage, but for sure, one of our goals will be to convince PE firm to put monies to fund the growth after us.
but necessarily some of the African firms invest locally. They are not Pan-African. They probably invest earlier on. Or would they be able to do co-investment with you? Or are they asking for it?
When you see the quality of the startups, I'm sure we will be able to convince PE firms. Not necessarily African PE firms, by the way. We will be able to attract very large PE firms into Africa. My guess is that in the next 5 years, you will have a total, you have seed fund, early stage fund. I'm sure you will see the first growth fund emerging.
Okay, would you like to take the same question about how is the education system impacting the entrepreneurial one? Is this relevant?
The education system does not match the global outlook that most African countries say that they have for the next 30 to 50 years. We're still living off post-colonial traditional education systems. Take a country like Cameroon, we've got gold, nobody studies mining. We've got a port, there's no course in logistics. None of it lines up.
I suggest we close it with that, with this last punchy line of the day. Thank you very much for your attention. Thank you.
Thank
you very